Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Tuesday, December the 18th, 2012. We'll be looking at several different major markets going around the globe today. Starting off with the Financial Times, the MIB, the Milan Index. In this particular chart, you can see that we gave a signal on this day, had a nice hammer below the 50-period moving average after a nice breakout of higher highs, a nice pullback here. Gave us entry opportunity the next day here. We started moving to the upside. It's great. We've advanced the stop to this point. You'll notice in this particular case here, there's no sign that she's going to be stopping anytime soon. However, you have had 1, 2, 3, 4, 5, 6 consecutive days to the upside. Eventually, you will get a down day, and that will probably stop you out. That's fine. But when that day happens, you'll be looking around saying, where do I get back in? Because there's so many charts that are just looking overextended right now. So let me show you a couple things. Okay, you can see here, looking at the French CAC 40 index, that the actual chart activity has made a big move from the low point here. And we expected a little pullback after this point. Didn't happen. We just continued to move higher. Now we're consolidating here. Do you buy this? And you'll see some charts are actually breaking out from this point. It would depend on the chart. I recommend you look at the longer term charts, because some of them will show you that they're overextended on the long term, even showing some that have bearish divergences and things of that nature. Those, of course, you wouldn't want to mess with. But there are others that you would. And again, all these charts, as well the short term and the long term charts, are kept on our free website at PerfectStockAlert.com. You can check them out there. I'm going to show you a couple today, but I really recommend you check them all out there. Okay, the main chart I want to show you regarding the longer term perspective and the short term perspective, cross comparing them. We'll be looking at the EWJ, the Japan iShares. In this particular scenario, we've already on the long side here saw this as consolidation, looking for a breakout. Got a false breakout here, and then a real one here. Didn't take out a stop that was here. So we advanced the stop at this point. This is actually still a buy right here at 952. The reason for that, and if you're looking at this chart, you may think, well, she's overextended away from the 50-period moving average. She's just now getting up to the overbought condition. Look at the long-term chart. Okay, here we are looking at the 2-year weekly chart for the same chart, the Japan iShares EWJ. You can see we've had this nice little bullish uptrend line going on right here, like possible reversal is developing here, and then we have this resistance line at the 950 zone, and we've closed above that as of today, 952. That means that this resistance right here has been beaten. There's nothing there to stop you now from going to 10. That's just a way I would look at that. So whenever you're analyzing this, if you see a day or two to the downside after she's broken out through the resistance, that's normal. She's just pulling back to test the previous resistance to see if she finds support. Even any kind of a pullback you get here, you'd expect to be shallow, because you have these major support lines between the 200 period and the 50 period moving average. That's going to be providing support, as well as that previous resistance now acting as support. So all that in line tells you to look for this to continue to move higher. You'll also notice that you have an overbought condition on the ultimate oscillator. The main thing about this condition, anytime you see an oscillator, when you see overbought and oversold conditions, that typically means that you're moving sideways. Whenever you're doing that, you're looking at, okay, we've run to a certain point, we expect to pull back, that's normal. That's how you typically use it. The only time that's different is whenever you have a breakout scenario. In a breakout scenario, you can get overbought, which is just basically showing you momentum is strong to the upside, and stay that way, which would make perfect sense, because you're on a breakout. Your next point of resistance would actually be the previous high that failed. So you'd be going up here to the 10 level and see if you have resistance there. So you have a lot of upside still potential here. Don't just get stuck at looking at ultimate oscillators or any other oscillator you may be looking at thinking, oh, it's overbought or oh, it's oversold. The reality is a situation can arise where you have breakouts and breakouts up and down, where they can stay oversold for an extended period of time. They can stay overbought for an extended period of time, because they're not really telling you overbought, oversold. They're telling you momentum. So they're telling you momentum is strong here, so we expect it to continue to move to the upside. Quick glance here at the Dow Jones Industrial Average. I'm not going to go into great detail here, because I did that yesterday in the U.S. markets as well as the Toronto Stock Exchange. And I recommend you watch that video if you haven't done so. There were some alerts issued there, and I recommend that you do that. The main thing here is that the U.S. markets and the Toronto Stock Exchange will be the most oversold conditions that you have looking around the globe right now. So whenever you're looking out there for, where can I find an opportunity that I haven't already missed? Actually, though you've had 2 nice days to the upside here, I don't think you've missed anything at all. I think you're just taking off. This move here and here, if you missed it, well, then too bad for you, but the rest of us are making money there, and I still see this as the best opportunity comparative to the global markets when you compare the price activity, the current close, to the current 50-period moving average. So if you look at that, you can get an idea of how to gauge how overextended are individual companies or individual market averages out there. And you'll notice the Dow Jones Industrial Average, the NASDAQ, the S&P, the Russell. I'll go ahead and not mention the Wilshire 4500. I think that was a bit more extended than the rest of them, so check those out. And also, again, I believe that the TSX, the Toronto Stock Exchange, was the most oversold out of all of them, so check that out again. Also, they're all on the video that we made yesterday, as well as if you go to the free website at perfectstockalert.com, you'll see what actually I bought yesterday. So God bless, take care, I'll see you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.